business. My name is Anthony Sebali, and I'm your host for Financial Markets. And on this program, we specialize in giving you insights into the money and capital markets and what's happening on the stock market and what's happening in companies that are licensed and listed on the stock exchange. And today, in a special way, we are inviting Mr. Kayemba Isaac, who is a financial analyst from a support staff from SBG Securities, which is a licensed broker as well there, which we have had on the show, I think, for the past couple of weeks. But now here today, we are talking about Cipla. Now, as required by the law, in the Uganda Securities Exchange listing rules, section 45, a company that is listed on the stock exchange is supposed to release annual reports, financial reports, at least 4 months after the end of each year. And Cipla recently, on the 18th of May, released its annual report for the public to view how Cipla has done. And it registered profitability for the very first time in a couple of years since it was listed on the exchange. And today I'm here with Mr. Kayemba Isaac to talk a little bit more about that report. Mr. Isaac, you're most welcome.
And thank you for having me. Yes, so as he has clearly stated, my name is Isaac Kayemba, supporting at SPG Securities. And we shall talk about financial statements, and in particular, the recently released results of Cipla. So financial statements are an important part of any company.
Yes, that's where we wanted to start. Why do you need, as a shareholder, to know about the financial statement of your company?
Financial statements provide insight into activities of a company. Yeah, they show you the health of a company, how it is operating, how it is taking care of its assets, and it is very important for you as a shareholder, as an investor, as even a person that is giving debt securities or debt instruments to the company. It is important for you to understand how the company you're dealing with has performed. So they are usually released in a certain given period of time. Yeah. So either within a year, on a quarterly basis, on a half-year basis. So you're getting results at that time and for that period. Yeah. So there are three major kinds of financial statements. Yeah. We have the income statement, we have the balance sheet, and the cash flow statement. So the income statement is providing activities within a certain period of time. It is showing you an outline of a company's revenue from its operating activities. Yeah, it is showing you what costs the company is incurring, what expenses it has the obligations it has to spend on as a company within its operations. Then at the bottom, you will find what is left or attributable to the owners or shareholders of the company. Yeah. So the balance sheet provides information about the assets the company has on its books, the liabilities, and equity. Yeah. And all this summed up, when you sum up the equities section and the liabilities section, you should have a total of the company's assets. Now, the cash flow statement.
No, but before you go there, some people don't understand the difference between assets and liabilities and all this, and we want them to understand as well.
So assets are what the company owns right now and expects economic benefits from in the near term, in the near future. So they're usually categorized into current assets that can be liquefied within a period of 1 year or within an accounting period, or non-current assets, which are usually long-term for long-term benefit. Yeah.
Okay.
So under current assets, we have goods receivable. Yes, please. We have assets like cash.
Inventories.
Cash is an asset. We have inventories. Yeah, as you have stated. Then under non-current assets, we have the machinery the company owns. That is sometimes stated as plant, property, and equipment. Yeah. Yes. You also have intangible assets. Yeah, that can include patents or agreements it has in different jurisdictions that will bring value, economic value, to the company. Yeah. So when we go forward to the cash flow statement, so a cash flow statement.
You didn't talk about the liabilities.
So sorry about that. Liabilities are what the company owes. Yeah, it is expected to give money. Yeah, to the people that give them those liabilities. It is what the company owes. In simple terms, it could be the company's debt. Yeah, payables. Yeah.
Yes. Share capital.
Its share capital is part of equity. Yes. Share capital, what the investors have given the company to be able to operate. Yes. So those are the key things you find on the balance sheet. And
the loans.
Yes, the loans. And the balance sheet shows you the company's health at a certain period of time. Its financial position. We can't call it health. Yeah. Yes, please. Then lastly, the cash flow statement that provides a reconciliation between company's earnings and its actual cash that it has on book. Yeah, it shows you the difference between what the company has earned and the actual cash it has. Yes.
Can that be different? That the company earns differently and still has different monies?
It can be different. A company, you might sell goods. Let's say I sell matoke. Yes, please. So I will give you my bunch of matoke. But you will not pay later. You will not pay at this moment. You will not pay at this moment, but hopefully you will pay later. Yes? So at that point of the transaction, I have to record that I have sold matoke. Yes? Worth 10,000 shillings. Yes? And I will record the receivable on my books. And at the point when you pay, yes, it now converts back to cash. But you record revenue at a point of accrual, which brings me back to those two key things. The ways of accounting is accrual-based accounting and cash-based accounting. So cash-based accounting is you record what you have received within the company, yes, and accrual-based accounting records any transaction that takes place, be it an expense, be it a revenue, you record it as at when it occurs. Yes. Okay. Yeah. So that's mainly the basis within which financial statements are released. Yeah. You want to find out how is the company doing. If I'm investing my money within this company, yeah, are its directors, the governors, are they doing what is within my best interest? And they are for a certain period of time. Yes. So it is important that you look at them with that perspective, that they are for a certain period of time. Yes? Yeah, that's it.
Okay, now let's look at Cipla now in particular, which has just released its financial report, which I've already broken down. Looking at its income statement, as you said, we see revenue that dropped from 284 billion to about 267, and then the cost of sales also dropped from 229 to 196, and then there's a gross profit. Yes. Now, some people don't really understand the difference between the two, the gross profit and as well the revenue. Okay. Could you help break it down and tell us exactly in the perspective of now Cipla, is this a good-looking income statement as far as revenue and gross profit is concerned?
Yes. So, as you have outlined, yes, its revenue dropped.
Yes.
Yes. And that is attributable, according to what they stated in their released report, to some of the one-off transactions that were taking place within the COVID-19 period. Yeah.
One-off. What do you mean?
One-off, as in they are not going to recur. Yeah. You might receive contracts, or you might receive, you might make sales that are not going to happen in the next due to special circumstances. Yeah.
Meaning this is like it's happening once, it's not happening again.
Yeah.
It's not like
it might happen again, but it is not continuous.
It's not continuous.
Yes. So that a drop within those clearly stated, as they stated in their release. Yeah. Some of those changes made their revenue drop. So what entails revenue is what you receive from the operations of the company. Yeah, and this case Cipla is a drug manufacturer, so it sells from the drugs they manufacture is what we record as revenues.
Yes.
Yeah. So then it's gross profit. Yeah. Is an indication after making that revenue. That revenue comes with costs. There are costs to produce those drugs that they sell. So after removing the costs, then you have your gross profit on your income statement. Yeah?
Yes.
So an increase in its gross profit margin indicates that they are taking strides, yeah, to make sure they are contracting with their suppliers is better. They get, in layman's language, better deals on their supplies or raw materials. So that indicates the company is improving or taking strides to improve. That can be an indication. Yeah.
Yes.
Reduction in costs of production. Yeah. Then you will have a better gross profit margin.
Should I, as a shareholder, now I'm looking at the income statement, should I always look out for the value of the revenue, or I should say, if at all the gross profit is doing good, I don't care much about the revenue?
Gross profit is still at the top of the income statement. As a shareholder, it's important to look at the net profit. Yeah, okay. Because that's what is attributable to you, or is attributable to you as a shareholder. Yeah, but also the revenue line is important, because that is, as it is growing, it shows the company is improving, it is making better deals, yeah, getting better contracts,
yes,
yeah, and improving income that comes in within the company. Yes.
Now, in the case of Cipla, we go down to, if you go down in the income statement, we have other income, then general and administrative expenses, and then reversal. Those ones at least are understandable. Maybe probably other income means they got some other income from external sources.
Yes.
But then we have reversal of impairment allowance. What does this mean?
So when a company sells, yeah, makes sales or sells anything, yeah, you expect that if I've sold my matoke to you, that you shall pay back at a certain period of time. But if that takes long, or you're able to take into account, yeah, the time period we have taken, there are a number of things that you take into account,
yes,
to substantiate, yeah, whether that money will be paid back, or the receivables that I recorded, yeah, shall reflect into cash. Yeah. So if I, within with probable cause, yeah, substantiate that you won't be able to pay, or there is a risk that you're going to, I'm going to lose that. So you can't call it an unexpected credit loss. Yeah. I have receivables on my balance sheet, but you will not be able to pay. Yeah. Or there are circumstances that might not make you pay the money. So I have to remove, let me call it remove, these a certain percentage of the receivables from my balance sheet, and it becomes an expense line on my income statement, showing that there is a chance that I shall not receive that money. Yeah.
Meaning they have not received this money in actual sense. This money, yeah, probably someone made an order of drugs, they have not paid back. They are not sure if they will pay.
They will pay back. Yes. But if you can look at the recently released results, they indicate that part of that money, through initiatives with the government of Uganda, was returned from the government of Zambia. Yeah, positive on that line that indicates impairment. So for the previous 2 financial years, they recorded a loss within. They recorded a loss. There is a chance that they might not get back that money.
Also, whatever is in bracket is a minus. That's what it means.
Yes, what it means.
Oh, yes, okay, yeah, I can see that.
So that's important to note when you're reading the income statement.
Yeah. What's in bracket means we are subtracting that, and then we add what is just plain. Okay, so actually this was paid by government.
Not the government of Uganda, but the government of Zambia.
Oh,
yeah.
Okay.
So if you read through their release report, you can't see that kind of information.
Oh.
Yeah, so that's for the income statement.
Okay.
Yes.
Then we have operating profit loss. I think this is after subtracting from the gross profit.
Yes.
We remove these other expenses and add other income.
Yes.
And now we have Profit or loss before tax.
Yes, yes. So that is before the tax element is removed.
Mm.
That's what the company has. Yeah?
Yeah.
And under corporate laws, any company has to pay taxes. Okay, we all have to pay taxes.
Yes.
Yeah? So then that taxation line is also removed, and you have your net profit at the bottom.
The total comprehensive profit.
Yes, the
Or
net
loss.
profit. Yes, the net profit. Now, total comprehensive loss or profit comes from something else. Yeah? There are some items that cannot be recorded within the income statement because they are not part of the company's daily operating activities. In this case, Cipla has no such line, but you could have gains from financial assets that you hold. It is a gain, yeah, but it is not part of your operating activities. So it
Probably
will be
invested in some land, piece of land,
Yes,
and maybe
so-
sold it and got some money.
some money. Yeah, you can have that on the total comprehensive income.
Okay.
Yeah. So the key point here, one of the key items to look at is your earnings per share,
Yes.
as it shows if I have one share in the company.
Yes, earnings per share. I see.
Yes.
Yeah. How much?
How much of those earnings is attributable to me as a shareholder? Yeah. So key point to note on the recently released results is the company recorded a profit for
I
the
see.
first time
Yeah,
since
for the first
listing.
time, yes.
Yeah, which reads well for the company. Yeah, they're
Yes.
able to give back to their company shareholders. They declared a dividend of 2 shillings per share, which is a good riddance for the company. Yeah.
Okay. So now, after total comprehensive, I see, because last year I'm seeing that figure, the total comprehensive profit in brackets, meaning they made the loss.
Yes, for
There
the
was
last
no
year.
profit.
Yes, for the
And
last financial.
there was no dividend. Actually, even the dividend, the dilute earnings per share is in bracket, meaning
Yes,
actually
it's
they were,
negative.
as if they were, they were being owed by the shareholders.
They are losing money.
They are
yes.
losing money.
Yes.
Wow.
But yes, that is still attributable to the impairment losses they were
Yeah,
recording.
I think
Yeah.
yes. The
Yes.
impairment
So
loss
it's
was
a very product
negative.
intensive company.
Mm.
So you expect such things.
Yes.
Yeah.
Wow. Okay. So now I'm seeing that the basic and diluted earnings or loss per share is 6.59. Yet you said they're giving out a dividend of 2. Why not 6? I'm seeing the earnings per share is 6.
Yes.
But why are they giving only 2 shillings?
So the company is expected to keep on operating. Yeah. So they will not have to give out all the earnings they have. To their
okay.
shareholders.
So if they give
They
out
have-
all the earnings,
Yeah.
they would have to give 6 shillings per shareholder if they give out all the profit.
Not exactly, but if you can look at it that way,
Yes.
yes, it could be similar to that. Yes.
Mm.
Yeah. So they shouldn't be giving out the entire profit to their shareholders.
Okay.
So they just give out a certain percentage. Yes.
Okay, interesting. Now we move to the balance sheet. We had non-current assets standing at about, non-current assets. We had property, land, equipment, capital in progress, tangible assets at over 75.242. Are these figures in billions?
Yes, they
they're
are
always
in
in billions.
Not always, but they are in billions.
In billions. So this is 75 billion.
Yes.
Okay, so we had about 75 billion in worth of assets. And then we had current assets worth 169.42. And then we have total assets. Now, what should I look out for now in terms of the balance sheet?
So in terms of the balance sheet, you're looking at the company's liquidity, solvency, its ability to meet its debt obligations, both short-term and long-term.
Yes.
Yeah. So the company should be able to pay out money to its debtors when required. So that's some of the key points you're looking at.
Yeah.
And then you're also looking at how much are they making in return on their assets. You're looking out for such key things. And then you're looking at their return on equity. What do they have in terms of equity? So you're looking at all those key items. Yes.
So should we also say that the assets should always exceed liability for a company to be healthy?
No, not really. Not really. Because you could have small assets, but you're able to cover up for your debt that you take up on. For example, if you look at software companies, they rarely have big plants and big manufacturing units. Yeah, they usually have small teams developing an app maybe, but the app is making more money.
Yes.
Yeah, and they can't take on a huge sum of debt to pay up for what the company is to pay up what is obligated to the company,
Yes.
and use that debt in the operating activities of the company, as long as they are able to make up that money.
Yes.
So it's not always that company has to have a
High
huge
assets.
size of assets. Yeah. Yes.
Yeah. Okay. Now moving finally to the summary of the cash flow statement.
Yes.
What should I look out for in this case now?
So the cash flow statement is showing you how much cash,
yes,
free cash flow the company has on book. Yeah. So it is very important for your shareholder, as you are able to ascertain at any point in time, is the company able to pay its debt using its cash on its book? Yeah. Is the company able to pay out a dividend to its shareholders? It highlights where the company is still able to finance its own operating activities. Yeah. So cash is a very key important aspect to an investor. Yeah. It is very important to look out for that statement.
You said cash is what they have at the moment. Is it like cash in hand and cash at bank?
It's not exactly that. Yeah. As cash keeps increasing as the company moves on. Yeah. So at bank, they might have a certain amount, but then have a certain amount in free cash flow. So you might have cash at bank, let's say at 1 million, but you borrow money, yeah, let's say 500,000. So your cash on your cash flow statement will be 1.5 million, though you have 1 million as cash at bank.
Yes.
Yeah, so it is free cash flow, cash available for me to spend at this moment. Maybe acquire more assets, pay out a dividend, pay interest on my loans. Yeah.
Wow, thank you very much. That was Mr. Kayemba Isaac, and we were going over the report that Cipla recently released. Maybe one last word to the shareholders who have shares in Cipla. What should they look out for in the next financial year, probably, according to what you have seen?
So the company is improving. Yeah, that's one. So it's very important to look out for. And then the company itself is growing. Yeah, it has potential within the Africa region. Yeah, it's signing contracts within the Africa region and Sub-Saharan region. Yeah, improving in revenue terms. Yeah, reducing its costs. So for you as a shareholder to make your own research, yeah, understand how is this company going to benefit from me. Yeah. So it is important that we keep looking out for how is it improving in terms of revenue, how is it cutting costs, yeah, is it making more profit, yeah, so such key things, yeah.
Wow, wow, thank you. There you have it, ladies and gentlemen. That was Mr. Kayemba Isaac. Mr. Kayemba Isaac is my OB from Chitovu, and we shall have that conversation later on after the show. But we are going to go for a short break, and when we return, I promised we'll be bringing someone else from SBG, that is Mr. Sydney Ampire, who is going to talk about how we can invest and save wisely in the capital markets, especially in these turbulent times of inflation and volatility. How can we safely invest in capital markets? Don't go anywhere. We're coming back with more stuff. See you around.